Hello and welcome to CMC Markets and this quick look at the week beginning the 24th of April, and it certainly wasn't meant to be this way. Disappointing start to Q2 for equity markets in general. Since the beginning of April we've seen a steady decline in European equity markets. We've seen a sharp decline in the FTSE 100. We also have the political risk of another UK election to contend with, but ultimately I expect that to be sterling positive in the longer term, and I'll talk a little bit about that over the course of this video. But it's going to be the euro that's going to be front and centre this week in the wake of the first round of the presidential elections on Sunday. Now let's look at some of the polling numbers with respect to the outcome this weekend. And at the moment the favourites to go through to the second round of voting are Emmanuel Macron and Marine Le Pen. Now if that outcome turns out as to be expected, then ultimately I think the euro could well see further gains towards the upside, because ultimately I think the expectation is that Emmanuel Macron will win the final vote in May. But will that mean that France's problems are over? Yes, Mr. Macron is pro-EU, but ultimately he has no party political apparatus to back him up, which means any potential reforms that he talked about in his election campaign will be very difficult to pass. Ultimately, whoever gets through to the final round is likely to be a lame duck president, which means the status quo is the most likely outcome for French politics going forward. Now obviously there is a wild card here. The wild card is Jean-Luc Mélenchon, who's seen a significant rise in the polls over the course of the past few weeks to 18.8%, and you can see that in this graph here. Now obviously the outlier outcome is if Jean-Luc Mélenchon and Marine Le Pen get through to the final vote of the French presidential election, the second round. If that happens, then all bets are off. The euro is likely to come under increasing pressure, given the fact that both of these candidates are very much outside of the mainstream political arena, and as such their political outlook is likely to be very unpredictable and very difficult to gauge. So you could see the euro come off quite aggressively, and French stock markets also come under significant amount of pressure. But looking at the chart on the euro dollar, we do appear to be starting to see the signs of a move higher. So I think the key levels to keep an eye out for here on euro dollar, given the fact that it's going to be a big week in the wake of the French presidential election first round, and the fact that we have a European Central Bank rate meeting on Thursday. I don't think we're going to get any surprises at this particular meeting, simply because we've seen a significant softening of inflationary pressure. So I think the likelihood is the status quo will be maintained, and Mr. Draghi will try and steer a middle ground between hawkish and being dovish. But on the top side we are approaching some very key resistances around about 108.5, and that's the trendline resistance from the May highs last year and the 200-day moving average. So approaching some very key levels on euro dollar, but also approaching some very key levels on euro sterling in the wake of last week's vote to hold a general election from the UK Parliament on the 8th of June. And I've talked about this a great deal in my previous videos over the course of the past few weeks. This very key support level on euro sterling at 83, which is potentially a head and shoulders reversal. Now if we break below that, then ultimately all bets are off. The sterling is likely to strengthen quite significantly, and this really does tie into my view of a stronger pound over the course of the next few weeks and months. But ultimately, while we're above 83, the potential for a short squeeze still remains fairly high, back to around about 84.5 and potentially 85. Certainly on the daily charts we are a little bit oversold, and that does appear to suggest that we could get a little bit of a move back towards these mid 84s and maybe low 85s, the top of this particular candle here. But what's really driving my sterling view here is this classic breakout that we've seen on the cable chart, which we saw last week. This triangular consolidation that we've been in over the course of the past few months, which we broke out of in the middle of last week. We've also broken above the 200-day moving average for the first time since the middle of the summer, and I think that is significant. We've also got the 50 and 100-day moving averages starting to tick higher. We've also broken out of this triangular consolidation here. Now if we take a measured move projection of this particular breakout here, we're certainly looking at a move to 133.12, 133.10.12 over the course of the next few weeks and months. Now what can derail that? Well, any number of factors can derail it. Ultimately, on a technical basis, what I don't want to see is a move back below the 200-day moving average. So really we're looking at a potential support coming in around about 125.80 on the downside. At the moment we're consolidating around in and around the 128 area. If we do get some pullbacks, then we could find support around about 127, 126.95, the highs that we saw in February, but the big support will be back down near the 200-day moving average, and obviously the breakout point of this triangular consolidation, which is also at the same levels. Now other factors on the agenda next week are going to be the results, the latest quarterly results of the UK banks. RBS, Lloyds and Barclays give us their Q1 trading updates, so they should be fairly interesting given the recent news that ultimately Lloyds will potentially be going fully back into public ownership, private ownership, so the UK government will be disposing of the rest of its shares, and the fact that RBS, Philip Hammond, has acknowledged the fact that ultimately the taxpayer is not going to see a profit on those shares, and they will be looking to offload the rest of those shares over the course of the next few months and years to return it to private hands, albeit at a loss. Also got the Bank of Japan rate decision, so we'll be keeping a close eye on that, and also keeping a close eye on the first quarter trading update for ExxonMobil, given the fact that we've seen some significant weakness in oil prices over the course of the past week or so. So that's it for the look at this week. Thanks very much for listening. It's Michael Hewson talking to you from CMC Markets.